Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I am joined, as always, by Jerry Correia.
Hello.
We're here to talk about the precious metals market, the week that was, and the prices that should be. Jerry, so far, gold has definitely been trading in a range. We're seeing multiple attempts to break out, but definitely range-bound for now. The big story today is going to be about Scott Bessent and some of the comments he made, I guess, in a speech on Fox News recently. I don't know. We were just watching some cryptos started tanking, and we were asking what's going on. Turns out it was Bessent was talking, and very interesting stuff. We'll get into that. Silver is looking surprisingly strong here. We are above $38 an ounce. Again, I think that this is very good for us, and what did you make of that?
Yeah, both metals. Like last week, we're also recording on a Thursday. Scott Bessent. It was a very heavy news week, a lot of data, so it was a lot of consolidation. But despite the data that came out, gold and silver very buoyant throughout the week. Last week, Thursday, when we recorded, we saw the dip. Today, another dip, but throughout the week, in the midweek, certainly looked like gold was going to break above the highs, above range, and silver still within range. So both metals look very, very buoyant. We are heading into Jackson Hole week. So usually, as the case with Jackson Hole in Wyoming, the central bankers get together and they start patting each other on the back. And it may give Jerome Powell some time to talk up the U.S. dollar and push back against rate cuts. But Scott Bessent doing a lot of verbal against Powell and company today, stressing the need for a huge 1.5% rate cut. That's what the U.S. needs. That's what needs to happen. But as we saw with the data that came out, we had rising inflation numbers from Tuesday. The inflation numbers came out very, very hot, although on Tuesday the CPI data came out a little bit under expected, but still all indicators pointing at higher prices. But the big one was a big bang today. It was the U.S. wholesale prices. The PPI index was just a purchasing producers index, just signaling that prices, if you're in business, your prices are going up, and you're now passing this on to the consumers, to the customers. The expected was about 2%, and it came out to like 9%, Jeremy. 9%.
And that should be motivation for the Fed to drop rates?
That would be motivation for them to raise interest rates, because if interest rates, inflation is high, you got to start raising rates rather. But on the flip side, they're really caught in between a rock and a hard place. As FX Empire pointed out today, the Fed's policy trap fuels the gold bull market. Although we're seeing rising prices and inflation, they're trapped because they're also seeing rising unemployment. So they can't be raising interest rates, squeezing the employers. You got to loosen the market. You got to loosen the taps to help the unemployment situation. So they're caught, once again, the Federal Reserve is caught in between a rock and a hard place. So
well, then they're better off to just do nothing.
So the Fed policy, according to FX Empire, they were cited as saying gold prices are consolidating near 3350 spot and 3400 futures as investors position for potential stagflation scenario. And stagflation is what we're seeing. Colbasi letter reported this week that 71 large U.S. companies went bankrupt in July. That's the highest monthly total since the 2020 pandemic. This follows 66 and 64 filings in June and in May, respectively. Year to date, there's been 450 large bankruptcies in the U.S., the most in 15 years. So although we're seeing a lot of good things happening with tariff income, it's still very expensive to keep the lights on in with these companies. The producers, the PPI indicates this, and this is stagflation. This is a time where we're going to see rising inflation, low growth, very good and supportive for gold.
Okay, well, I'm going to push back on that a little bit because I've got an article that's going to talk about a major investment company that doesn't see stagflation. Also, Jerry, you often say how skewed the numbers are. So what What would you say to someone who just said that to you?
Yeah, you know what? I say that to myself. I'm like, do I really believe the CPI number that came out at 2.7? No, I don't.
Yeah.
It's really just the show that we're watching. You know, pop the popcorn. This is an ongoing saga, but we know that something's gonna break. Something really looks like it's getting really frothy. It's getting hot out there. The uncertainty is piling in. This is why we're seeing word salad from Scott Bessent in the last 48 hours.
Yeah, I was listening to an interview with Jim Rickards and Nomi Prinz. Nomi Prinz was interviewing him. And, listen, let's skip to the end. He sees $4,000 by the end of the year on gold prices. And obviously, he maintains that it's a great asset to be holding long term. You know, even just this last 2 minutes, Jerry, there's so much countering information. It's hard to know where you're at with things and to get through all of the noise to understand what the true, where the economy really is. Zero Hedge put this out with regard to gold, that gold has been stuck in a narrow channel for the past 3 months as markets await the next tidal wave of central bank easing. It's coming. So Zero Hedge believes it's coming. This one was put out by Eric Jung, who we follow, King Kong 9888 on X. He did a repost from Ben Rickert saying the greatest breakout of all time is the yearly silver chart. And Jerry, you'll love this. He puts out a picture of the cup and handle, and he says, if it closes the month above $36, it's on fire. Now, we're already $2 above that right now, plus maybe, we're over $38. So things are looking surprisingly good in the silver market, range bound in the gold market. Take us home to break here, Jerry. A lot of going on, a lot of different types of information. You see a Fed cut. You're not the only one, and you think that that's obviously going to bring gold from its trading channel right now to the higher levels, like Jim Rickards is saying, calling for 4,000, et cetera. Mm-hmm. He's not the only one. I think Bank of America is calling for 4,000. There's a lot of people calling for that.
Yeah, as we see that the Federal Reserve is definitely trapped between a rock and a hard place, but I do forecast interest rate cuts this year, that's for sure. Bessent wants 1.5% rate cuts. The market's really begging for that. As we filter through the noise, you really have to bring in those charts as well. I love the charts as much as the next guy, and citing the cup and handle. It's a 20-year chart. We're going back 20 years. So it's a really solid chart that you're looking at on silver. Coupling in with the 50-year, the third cycle chart that Jim Rickards presented, and it was also presented through Crescat Capital's Tavi Costa, where we see tremendous topside potential. When you look at where gold is at, we are at the tail end of a third cycle. And what that means is we're ready to hockey stick higher with all of the fundamentals supporting this chart. And it's a 50-year. We're not talking about a 2-hour chart or a minute-to-minute chart. This is a real solid chart coupled with the fundamentals. And what's important to know is, what did gold do during the previous two super cycles from 1970 to 1980 and from 2000 to 2010? Both averaged 1,400% from the low to the high. And the third cycle that we're in right now began in 2016. It's a 10-year cycle roughly, Jeremy. So that puts us around by 2026. We should have some fireworks, and the silver squeeze will happen. The breakout's coming up. So as we filter through the noise, get positioned, and get ready for the spike.
Great time to be positioned in the market. We always believe in crawl, walk, run. If you've never been involved in the gold and silver market, you want to just start somewhere, get a feel for what it looks like, pricing, what it feels like to have some physical gold and silver in your hand. And then, of course, you'll be able to make better decisions on where you'd like to go next, whether it's a registered account, maybe it's a TFSA, maybe you want to put it into a vault for ease of liquidity. Maybe you want to have it stored offshore in the Cayman Islands because you're not sure whether or not you're going to be living in a different country in 6 months. So there's lots of options with Guildhall. We'll walk you through it. We'll show you how it all works. The number 18778-SILVER, the website guildhallwealth.com. Great time to be in the markets. It really has been an exciting year. even though we're in the middle of summer and coming towards the end, it's been pretty busy. It's lots of people getting into the market, and it's great to see, and congratulations. And also, Jerry, it's been nice to talk to clients who've been in the market for several years, and they have all these options. I had a great conversation with a client who has done remarkably well in the gold and silver market, and we were just having a discussion about how to pull some money out of his registered account and how to limit the withholding taxes, et cetera. And it's talking about taxes and how to limit your exposure to taxes is a great conversation to have, because it shows that you've made money.
I couldn't agree more.
You're holding gold because you want to protect your wealth, but at the same time, it's performed so well over the years, and silver too. And I think silver, for many people, they underestimate the performance that it has had, because you're always, it's stair-stepped higher, and there's some people who've were purchasing it last year and they were paying in the low 30s for it. But here we are in the high 30s. They're ahead of the game now. So things are looking really good in those markets. Let's talk about Scott Bessent, because he was on, he addressed the speculation around the U.S. government buying Bitcoin for a strategic reserve.
Right.
And he laid that to rest, and he said, "No, we're not going to do that. We're gonna stop selling the existing holdings that they've gotten through confiscation, through criminal activities, etc." But in effect, he said, "No, we're not going to backstop the price of Bitcoin. We are not going to become a buyer of last resort. The market is on its own." And the market reacted very strongly to that, with Bitcoin coming down over 5%, which these days it's thousands of dollars at a time. And he also addressed the gold reserves. Now, he's done that several times already. We talked about this in February. Are they going to audit Fort Knox? There was the concept of revaluation. And he said, "No, we don't have an interest in that at this point." And he reiterated that again today. But I think the whole point of this is he's not here to give the markets the old razzle-dazzle. Mm-hmm. He's here in sort of a King's Speech kind of way, trying to calm everything in the midst of chaos underneath. Mm-hmm. And the government can't be seen as holding the market in one way or another. Whether or not they do is another story, but they can't be seen to be affecting all of those markets. And I see it personally as falling into the same thesis that we've had on this show for a long time. If we are looking at a gold revaluation, that doesn't have to include the government of the United States revaluing its gold.
Very true.
It doesn't matter if they revalue it from $42 on their books up to its current price. Yes, it would be fun administrative accounting practices. It'd be magic. But at the end of the day, what really matters is that they own it.
That's what matters.
Isn't that what matters? Isn't it matter if the central bank owns it or not? Mm-hmm. So that's my take. What's your take on that?
I think he did a lot of work this week of neutralizing a lot of fears. We saw last week about the tariff news, Swiss gold being tariffed. That was sort of put to rest, even though they're still on the table. But the big statement of gold will not be tariffed, that was headlined. That made the headlines. But as we see a real key theme here, gold is pretty relevant. The Federal Reserve is pretty relevant right now. They're both taking center stage, and one is seen as the enemy of the people. And you cannot go directly at the enemy of the people being, and this is in my opinion, the Federal Reserve being a central bank, because as we know, prior to the creation of the Fed, there was no income tax. There were tariffs. And then we had a gold standard, and it looks like things are moving in that direction. So I think at certain points, Scott Bessent and team have to neutralize how quickly things are moving, put things in neutral, and still progress at
I
the
agree.
same time.
I agree. I think,
But you're actually right. You know what? You're talking about like gold
I
reserves.
was. I mean,
as usual,
I
Jerry.
was.
You are. I think you are right in this one because, as we're seeing prices sort of shift from west to east. You mentioned that the United States doesn't have to be that country who revalues the gold price. It could certainly be done by China. India could certainly revalue the silver price. Why? Because they have most of the reserves in the world. China is undisclosed, and I think they have basically said it's a national security risk to reveal your holdings. And absolutely right. I wouldn't tell you how much gold I own and where it is exactly. So it's obscure. Some cited that China has upwards of 22,000 tons of gold. And that could definitely be, they should, in that case, be the new LBMA. They could be the new COMEX.
We'll who owns the gold makes the rules. The number, 18778 silver, the website, guildhallwealth.com. You know, at Guildhall, we help clients own physical gold and silver in their registered accounts. We walk you through the process. I had a long conversation, Jerry, this morning. Gentleman asked great questions throughout the whole interview, as it were, just trying to understand the difference between having gold as part of a pool account and these investments where there's very little cost to get involved, but there's no ownership of the metal.
I was overhearing this call.
And
interesting.
At the end of the day, though, Guildhall, and we were talking about price a little bit, right? What's your price comparable to this price and that price? And, I was saying to him, in 5 years, $20 here, $20 there is not going to matter.
Correct.
It really isn't. Everyone's in the ballpark. Everyone's in the ballpark. And I'm not saying we're overpriced. Believe me, I think we're very, very competitive. However, it's about, I mentioned earlier, Jerry, having a conversation with the client about how to avoid taxation and lower it, et cetera. And I'm not a financial advisor, but I've gone through enough withdrawals in Questrade to know how much is going to be taken off, et cetera. Mm-hmm. And so a lot of it is really about being able to talk to someone who's been in the market a long time. The market is so much psychology, so much ins and outs of the market. I find I'm doing a lot of education on just how registered accounts work more than anything, because I'm surprised at how much people don't receive that information. But, if people are left to their own devices a lot of the time, it can end up costing you a lot of money. If you're going to renovate your house, you can say, look, I'll do it on my own. Okay? All right. I hope you save a ton of money, but that's not necessarily the reality of the situation. So we really step in as those professionals to provide key information, provide feedback on the market, give our opinion. Even today, client was talking about, I had a call with a client. He was talking about, well, I'm thinking of putting this excess cash into a GIC, and here's like what I'm doing with my math. And I said, well, just make sure that you're buffering for your storage. If the price goes up 20%, your storage fees will go up too. Mm-hmm. And so we negotiated that with how to deal with it. But it's just these things, right? Yeah. And this can save you a lot of money, make you a lot of money. Mm-hmm. It's not just about, can I get it cheaper today? Mm-hmm. That's important, obviously, but you get what I'm saying.
Absolutely.
So that's where we step in.
Yeah.
So if you're looking for that kind of management and that kind of guidance in the market, experience in the market to help make your acquisition and ownership and path of owning gold the most successful, I think you should be going with people like us who know the market.
Absolutely. I couldn't agree more.
Well, you know how they would do that.
How?
18778 silver and the website guildhallwealth.com.
Oh, genius. Thank you, Jeremy. You know what? Your conversation sort of mirrored the one that I had earlier this week. It was a person with a RIF, which is a registered income fund. At the ripe old age of 71, your RSP converts into a RIF. You can convert at that point where you can get paid, you can get income. And you have a minimum amount that you can take out per year, and anything over that you have to pay withholding tax, as we know. This person didn't want to have any more cash. He had income coming in from other sources, so why take $12,000 a year in cash? That's just going to erode. because the real world inflation is roughly about 11%. And your GIC is only 6. So let's do some math here and realize, you know what, that's absolutely right. I'm going to take out 2 ounces of gold as is, and he's taking delivery right next week of the very bar numbers. He's like, let me select the bar numbers too.
Okay, that's over the top.
And he wanted to put it to the test. Well, that's the bars he was actually going to receive, and that's going to be the bars that he requested. So this is what we do at Guildhall.
He could have put it in a TFSA.
He could have done that as well, but he wanted it in his hand. He didn't have any gold. He had these locked-in accounts and these registered plans for such a long time. And to actually now being able, after so many years, he was up over 50, 60% on his RSP. So he's done very well. And he's grown beyond the rate of inflation and grown beyond the withholding tax that you have to pay. So give us a call, 1-877-8-SILVER, and we'll talk to you about your goals and how to do it the right way, in our opinion.
And of course, remember, we're not financial planners. This is not financial advice. Make sure you're talking to those you trust. We are only dealing in physical gold, allocated, segregated. We're not dealing in paper, ETFs, futures, options, etc. We only deal in actual physical gold and silver. Jerry, Crescat Capital, that's a name we often hear time and again on the show. What's going on with Crescat Capital? What are they saying these days?
Tavi Costa, he's a partner and macro strategist at Crescat Capital. He actually spoke at this year's PDAC in Toronto, the conference, the Prospectors and Developers Association of Canada. So anyone to do with mining in Canada, they all convene in Toronto downtown on Front Street, and he was there. So he told, he highlighted his firm's recent report that examines the thought of the gold revaluation. And he says it comes down to the treasury. How much treasuries are outstanding out there? 36 trillion. And how much do we own in gold? Currently, he says the value of U.S. gold reserves is about 2% of all those treasuries outstanding, compared to roughly 17% in the 70s and close to 40% in the 40s. And if we're going to have to go back to 17%, if we need to back those treasuries with gold, if we need to revalue, it takes us back to $25,000 per ounce for gold. And if we go back to the 40% backing prior to around World War II, it brings us close to a gold price of $55,000 an ounce. And can you imagine, Jeremy, as there is talk and neutralizing the idea of a gold revaluation, this is actually a report coming from Crescat Capital themselves, and this is their main report this year.
Well, it stands to reason if you're Scott Bessent, you'd be sitting there with your team saying, why would we revalue gold here and lock in? It's been locked in for 50 years at $42. Why would we revalue this? We're going to have to revalue it every week as it goes along, and that's just going to create more pandemonium. Right now, it doesn't matter, right? We have the gold. We have the gold. So that's impressive. That falls into the category of ratios. We're always tracking ratios, and this is just adding to that file of the treasury ratio to gold. Right? And again, just as we go to commercial here, think about the gold to silver ratio. We're still very elevated, high 80s. We truly believe that could easily go down to 60. I know Vince Lancy just did an interview. I can't remember which channel it was on, forgive me, but he just did an interview and he said he thinks it'll settle into the 50 to 1 range within the next couple years. That would put silver much, much higher comparative to gold if you believe gold is going higher from here. So sit with the calculator, play around with it. 50 to 1 ratio, 60 to 1 ratio. Look at gold at $4,000 an ounce, $4,500 an ounce, and where would that put silver once we break that cup and handle? When we get our close at the end of the month, Jerry, about $36 an ounce.
Noted.
The number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, one of my childhood movies, most favorite, is Charlie and the Chocolate Factory. I love that golden ticket, and there's an article you're going to be talking about golden tickets, so I'm really looking forward to hearing about that. But first, we want to talk about an article that came out from Victor Balfour. What a name. Victor Balfour from, he's a investment strategist and a director at Rothschild and Co. Wealth Management. So they did an article. Actually, you know where I found this article, by the way? I found this article on Guildhall Precious Metals.
Right on.
We have a news feature, and I totally forgot that we had a news feature, and it's really good because you've curated it so that it's only feeding from a few specific sources.
Correct.
Which are all providing great articles. So I actually grabbed it from there.
Excellent.
So you can go to guildhallpreciousmetals.com, buy a 10-ounce bar of silver and a tube of silver maples, and get some crazy good silver news at the same time. It's perfect. And you could do that all while waiting in line, to pay for your groceries, which are out of control, high in price. So you're sitting there saying, "How am I going to get my inflation rebate?" I know. I'm going to go to guildhallpreciousmetals.com and buy some silver so I can get my silver rebate against my inflation. And while I'm on that site, I should check out some news as well. Anyway,
that's the only way.
All right. Very quickly, they did some talk about gold in an article. And they said gold is having a bumper year. The shiny metal is up more than a quarter in 2025, on track for its third consecutive double-digit returns, a winning streak not seen since, of course, this is British, right? The mid-noughties. Gold has outperformed all major asset classes in recent years since 2020, and they show a Bloomberg chart. It looks really nice. It obviously has not been stable. There's always some ups and downs. Nothing goes up in a straight line, of course. And so he goes on to say now they're saying that gold has lost touch with its traditional drivers like real yields and the dollar, with demand shaped by geopolitical maelstrom, including protectionism and wider conflict. Yet, despite ongoing attempt to reshape global trade and even talk of renewed gold arbitrage, prices have been flattening for several months now. We've discussed this on the show. So how do we view gold from a portfolio standpoint, right? Again, this is Rothschild and Co. Wealth Management. They are overweight on gold, and they believe that it plays an important investment role. Historically, it's been a long-term store of value for over several millennia, lending monetary institutions their credibility and acting as a key medium of real wealth protection. It can also act as a financial panic button, a sort of last resort asset at times of crisis. Amidst fears of the U.S. default in 2011, banking collapse 2008, runaway inflation in 1979, it strongly outperformed securities markets. Almost overlooked amidst its investment role, it also has intrinsic uses in industrial and ornamental applications, though these form a very modest part of today's global demand. But it's impossible to value objectively, yada, yada. Meanwhile, so today Bitcoin went down as we're recording the show on Thursday because they're not going to underpin it by government purchasing, right?
And there was also a hack, I think, a $45 million hack.
Ouch. Meanwhile, Bitcoin's ascent and wider crypto competition to gold as debasement hedges remains an obvious, if unconvincing, threat to gold. I like that. Recently passed U.S. legislation is set to further legitimize stablecoins, which may encourage more enthusiasm for unbacked coins. But in the Bitcoin versus gold debate, we strongly prefer the latter. We see our role as investment advisors being not to help our clients get rich quickly, but rather to stay so.
Amazing.
I thought it was a very good article. We'll post it, and I think we'll send it out in our newsletter, and you can read it. It's pretty good.
I love that article. That's the key takeaway for me was the Rothschilds and Company. This report, a very just thunderous report that maintains a strategic overweight position. This sort of pushes back against the crawl, walk, run approach. I think they're just laddering in for a strategic position in gold. And they really highlight a couple things. Earlier in the show, we talked about, gold sort of defying the market logic. It's despite everything going on in the world, people want to know why in a risk-on environment, Why is gold following? Why are these things correlated? Which one's really telling the truth here? Which is the barometer? I think gold really is the one that's showing where the market's going. What you should be paying attention to. Central bank buying. Now you're seeing they cited the legacy fundamentals of inflation being a hedge, geopolitical
panic button.
Those are the legacies, but they also brought in new things that we talked about, the new fundamentals being remonetization, even scarcity-driven growth and industrial and monetary convergence. Gold has always been the monetary metal. They hold in reserves, but they cited, although modest, gold's being used in industry now. And we're seeing this in silver. Silver's always been this industrial metal, but Russia's holding it in their reserves, banking reserves. So gold is moving from just a hedge to a growth catalyst, and that's why they're positioning an overweight position, a strategic position in the gold market.
The number, 1-877-8-SILVER, the website, guildhallwealth.com. If you want to hold physical gold and silver, you want to own it, you want to acquire the highest quality products out there that you'll be able to liquidate on a call directly, not have any issues. Guildhall only deals in what are known as LBMA approved products. We also keep it down to just several SKUs, as it were, because we want to make it easy for clients not only to get into the market, but to get out of the market down the road.
Best experience.
So we keep it very easy for them, and we go with only the highest quality products. And we usually have sort of a premium product and a more economical product for clients to choose from, and different bar sizes, et cetera, to suit their, their criteria of what they're looking to do. Maybe they're looking to store some physical product at home, so they want some silver maples or some Austrian mint coins. And then even for gold, maybe they want some smaller gold coins and some smaller gold bars, like the 5-gram bar or the 10-gram bar. So it's all about providing the right type of variety so that clients can have peace of mind. And then, of course, if you're looking to protect, if you want to become your own central bank, you should look at having physical gold as part of your portfolio in a registered account. You don't have to use your entire registered account to have it with Guildhall. You could say, you know what, I've got this portfolio, I'm happy with my provider, but I want to put a portion into precious metals. We can help you do that as well. The number, 1-877-8-SILVER, the website, guildhallwealth.com. If you've missed a show, make sure you check us out on YouTube or Rumble or Spotify and follow us on X and do all of that lovely social community type of stuff. We'd love to have you. And, I love getting comments as well, Jerry, through our YouTube channel and having clients interact directly with us through the comment section. It's really great. Yeah. It's great to get that sort of feedback and also the questions. Mm-hmm. So definitely check us out on YouTube and Rumble if you've missed a show. And we're putting out some other content as well, so it could be useful for you. Jerry, talk to me about, did you get one?
I got one.
How many chocolate bars did you have to open?
So this is from Griffin Kelly's from the Daily Upside. The title of this one is called "Could Silver Be Client's Golden Ticket?" Because he cites, although gold's up 28% this year, silver is surprisingly up higher than gold at roughly 30% this year. Silver's role as an inflation hedge, industrial usages, combined with supply deficit, have created strong tailwinds for the precious metal. He says gold sometimes steals the spotlight as an inflation hedge, especially given the tariffs, but silver has been benefiting from that too. Unlike gold, as an investment or jewelry component, silver has that industrial application for demand. Silver, remember, is second to oil when it comes to industrial applications. Then you cannot omit military applications. Solar panels are the most common use. Then we have smartphone developments, AI and semiconductors, data centers. There's a structural tailwind from all of that they cite. So to them, silver is that golden ticket as supply constraints are also in play. They noted HSBC projects a deficit of 206 million ounces this year, up from 167 million ounces in 2024. Just think of that. 5 to 6 years structural deficits coming out of the ground. We need silver for everything, and you're not getting enough.
Yeah, it's ironic though that the retail market isn't really participating.
Yep. Exactly.
Oh, did they talk about that?
No, I just made a note of that. I'm like, this is not even the retail market.
I mean, I've heard some crazy stories from Paul about he talks with our partners and just the inner workings of the industry right now. It's wild how it's all, there's an arbitrage with Costco, right? All of these people are going out, they're buying, they're having retailers go out with teams using their cashback cards to buy the physical product, bring it back to a wholesaler, and the wholesaler is basically melting it down and sending it back to the refiner. So basically, by selling it to Costco at low prices, you've created an arbitrage in the market, right? It's like, it's silly. It's silly, and yet there's a deficit. It's being used like crazy in industry, and I don't think it's a case of I don't think it's a case that it's that people have no interest in it, although there's certainly been a lot of good movement in the stock market, and maybe it's I'm only going to buy insurance if the house is on fire. But I think it's also a question of the economy. Silver is poor man's gold, to be honest, and people need the money these days. You see the inflation, the stagflation, whether or not you agree with inflation or stagflation, whatever it is, whatever inflation is your taste. It just seems that there's the money needs to be put somewhere else for now.
Yeah.
And I think the problem with that down the road is going to be when the retail market finally figures it out, or finally are ready to make the dive. The product is not going to be there because that product is actually going back and being refined to go back to industry.
Yep.
So these deficits are being filled in with the retail market product that isn't being consumed right now. So when the market is ready to consume,
unobtainium.
Book closed, unobtainium. Sorry, watch those premiums go like crazy. So it's such an advantage if you can do it within a registered account. I think that's where it's such an advantage, where you can really thrive in the market with that regard.
No, you're absolutely right.
The Crescat, this article about the golden ticket, Super Cycle Capital on X saying the exact same thing. Silver is setting up for its biggest move in decades, and hardly anyone is ready for it. This could be the most explosive in commodities right now. Here's why. They point to mine production flat despite higher prices. Mexican output, something we've discussed, dropped due to permitting delays and strikes. New mine supply barely replacing depletion. Industrial demand's on fire. Solar, EV. And when it comes to this, unlike investment demand, it's a non-negotiable. They also mentioned the silver-gold ratio. Obviously, if it's really high, that's showing that gold is undervalued against, that silver's undervalued against gold. We didn't get into this today, but the COT data shows the commercials that have tried to short this market have been covering all dips. It looks like the managed money is trying to get net long in the market, which means they are getting ready to underpin higher and higher markets. They say, unlike 2011, the rally is backed by real industrial deficit, not just ETF inflows, right? That's an interesting one, too. So silver isn't breaking out, they say. It's resetting. Structural deficits, industrial demand explosion, and the gold to silver ratio still favor silver, suggesting the path up is steep.
Explosive stuff, Jeremy. I mean, this is the stuff that we're talking about and why we are encouraging you to get in touch and get some silver in your portfolio for the registered plans. A TFSA is perfect. I'm just so proud to be the ones that, we pioneered this. You guys pioneered this back in 2015. We brought this to the table because we listened to you. We heard you. You had RSP money locked in there, but Guildhall figured a way out to transfer RSPs over to us so that you can actually get some physical precious metals to protect and position for the coming topside potential. Now, this is breaking news, Jeremy, from Vince Lancy reports. We only have 1 minute. This is actually a breaking headline now. There's no news to corroborate, but Vince Lancy from the Gold Fix, we are subscribers to the Gold Fix, so you want to check out VBL, Vince Lancy's report, that the U.S. Treasury Secretary Scott Bessent may be exploring a debt for equity bail-in, where creditors, who are the countries, swap out debt for equity instead of full repayment. Now, this stinks of the Canada's bail-in regime, the Canada's legislation in 2018, where we had bailouts in one point in 2008, 2009 crisis. This time around, they're allowed to bail themselves in and replace your money, the debt that we were going to give you, for shares of a failed institution or shares in something. So we'll see. We got to keep an eye on this. This is huge stuff. And this is probably the reason why you want to hold your gold and silver entirely outside of the banking system.
Protect your wealth, protect your future, protect your family's future. Consider holding physical assets that are negatively correlated to the dollar outside the banking system, and Guildhall Wealth will show you how. The number 1-877-8-SILVER, the website guildhallwealth.com. Thank you for everyone joining us this week. Can't wait to speak to you next week here on The Real Money Show on 640 Toronto.